Introduction. Inflation can be described as the rise up in the general level of prices for goods and services over a cycle of time. It is expressed as a percentage rise each year. The annual rate of expansion of price index, generally the consumer price index, also known as the inflation rate. As inflation grows, your dollar purchases a lesser portion of what it used to. Where there is inflation, the value of dollar does not remain constant. Objective of the research. Firstly, to understand the effects of inflation before the COVID-19 pandemic and during the pandemic. Secondly, to study the different types of inflation in Malaysia. Thirdly, to understand the types and causes of inflation in Malaysia. And lastly, to find the best solution to control the effects of inflation in Malaysia. Types and causes of inflation. Firstly, demand pull inflation. Demand pull inflation happens when cumulative demand continues to increase further than economic capability to produce goods, while the national economy is at maximum employment level. Demand pull inflation occurs when the rise in total expenditure. When consumption expenditure increase, government spending, investment, and net exports, the demand aggregate will also increase in an economy. Besides that, increasing in money supply that excessive and uncontrolled will also cause a demand pull inflation. Next, cost push inflation. Cost push inflation is a process of increase of general price as a result of rising producer costs. We also can know as increase the price of the inputs that lead to rising of the price of the product. Cost push inflation was caused by the rising of the firm profit margin, increase in the labor wages, and the increase of the price of raw materials and many other. This will cause the decrease of the goods supply that result the increasing of the general price. The impact of inflation. During inflation, the interest rate will increase. We can say that the greater the inflation rate, the larger interest rates are likely to increase. In addition, increasing rate during inflation will motivate people to save their money in the bank. During inflation, banks will pay higher interest rate and this will give advantages to people and it will motivate them to keep their money in the bank. The government will increase the income taxes in order to balance the inflation rate. Next, increase the society's cost of living. As we know, inflation will cause all of the goods and services be more expensive. Their income will be the same, but the cost that they have to pay in order to continue their life will be higher because of inflation. The power of buying will be limited because they cannot buy a lot of things with their incomes during inflation. It will be hard to maintain their current lifestyle. In addition, the household debt will be increased since they tend to spend their money on their needs. Inflation before and after pandemic. Inflation in 2019. In the latest data show, the inflation rate of Malaysia in 2019 is recorded at 0.66%. The inflation rate of 2019 is decreased from 0.97% at 2018 to 0.66%. It is because the final demand producer of inflation in 2019 are increased less than 2018. Furthermore, the intermediate demand inflation for energy and core processed and unprocessed goods are declined in 2019, while the food-based processed and unprocessed goods become higher in 2019. Inflation rate decrease also bring a lot of disadvantages to our country. For example, advantages of decreasing inflation rate are the price of goods and services will become low. If the price of goods and services are low, will cause the amount of export increase. When GST changed into SST also is the reason cause inflation rate decrease. It is because SST is a single tax system which is only for particular complete goods, manufacturer and specific service contributors. In addition, the income of government will also decrease. It is because the direct GST will bring more income to SST from the government. Inflation in 2020. Through the latest data, the inflation rate of Malaysia in 2020 is recorded at negative 1.14%, which is the lowest record in Malaysia's history. This is because of the COVID-19 pandemic that still happened in Malaysia. Through under low inflation rate, the price of the product or service will become low too. This situation can make the purchase power become strong in the market due to people are influenced to purchase the product or service due to the lower price. Due to the low inflation rate, which means the low price for the products and services, the current firms will get low profit in the purchase process and effect that their income become low. The business will pay a smaller number of taxes to the country and cost country don't have many incomes to develop our country. Therefore, our quality of life will become low too since our country unable to develop. Solutions. Firstly, fiscal policy. Fiscal policy is the purpose of government expenditure and taxation to affect the economic condition. Fiscal policy work by the government affects the economy by manipulating the level and types of taxes, the magnitude and structure of spending, and the level of structure of borrowing. So it can be solved the economic issues such as inflation and unemployment. There are two types of fiscal policy, that is expansionary fiscal policy and constructionary fiscal policy. When the inflation occurs, government should use the constructionary fiscal policy to control the phenomena of inflation, which is to raise tax rates and reduce government expenditure to decrease community spending to overcome the inflation problem. The government can reduce spending or increase taxes or both simultaneously to reduce aggregate spending. As aggregate expenditure decrease, aggregate demand will decrease, further reducing general prices. As a result, demand pull inflation can be controlled. When government reduces government spending will decrease, aggregate spending will decrease, aggregate demand will decrease, there will be stock surplus from will reduce output. Besides that, government also can raise the taxes. When the taxes are raised, disposable income will decrease. Consumption expenditure will decrease, aggregate expenditure will decrease, aggregate demand will decrease, there will be stock surplus from will reduce output. Monetary policy. Monetary policy is a set of measures authorized by a country's central bank to support long-term economic development by restricting the amount of money available to banks, consumers, and enterprises. As the COVID-19 outbreak threatens Malaysia's development prospect, the country's central bank, Bank Negara Malaysia (BNM) said today the country's monetary policy in 2020 will be centered on promoting domestic economic. According to the BNM's Economic and Monetary Review 2019, the overnight policy rate (OPR) was cut by 50 basis points to 2.5% between January and March 2020. The Bank of Malaysia will continue to guarantee that there is enough domestic liquidity in banking system to keep domestic financial markets working smoothly. According to BNM, the reduction in the statutory reserve requirement (SRR) ratio to 2% in March 2020, as well as additional SRR facilities granted to principal dealers through the recognition of MGS Malaysian Government Securities and MGII Malaysian Government Investment issues for SRR compliance, as released approximately RM30 billion of liquidity into the banking system. Malaysia GDP is predicted to expand between -2% and 0.5% in 2020, thanks mostly to COVID-19 epidemic. Aside from the pandemic, the domestic economy will be hit by the large drop and irregular variations in oil prices, as well as continuous supply disruption in the community's business, according to BNM. Lastly, conclusion. Inflation, be it positive or negative, has a lot of pros and cons. Most will think that having a negative inflation like the one Malaysia faced in 2020 means that the economy is recovering, but the problem with deflation is that it commonly leads to slower economic growth. Nevertheless, there are also benefit sides to them, which consist of mild inflation, allows adjustment of incomes to be made.